Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and on this edition, I'm going to share with you the entire wrap of today's trading session. Well, it was a day when we saw bloodbath on D Street. Consecutive fifth straight day of decline on the D Street is what we have witnessed. The Sensex and the Nifty falling extremely sharply. In fact, on an intraday basis, the Sensex lost about 2,000 odd points, the worst single day fall in the last 7 to 9 odd months is what we witnessed for the Sensex. Overall speaking, it was a broad-based sell-off that we witnessed across the street, be it the benchmarks or the broader markets, extremely sharp fall, and the Nifty Bank as well. Overall sectors also falling in the red, and many stocks, be it the biggies of the stock markets or the mid-cap stocks, all of them saw sharp cuts coming in today's trading session. So let's look at the closing levels for today. The Sensex was down 1,545 odd points, or 2.6% cut was seen on the index with a fall, and it closed at 57,491. Talk about the Nifty now. It was down about 468 points at close, and it ended 2.6% lower at 17,149. About 450 shares advanced in trade, whereas 2938 shares declined in today's trading session. 100 shares, however, remain unchanged in the overall markets. Now talk about the kind of stocks that fell sharply in today's trading session. JSW Steel, Bajaj Finance, Tata Steel, Grasim Industries, Hindalco. These were the top Nifty losers. Talk about Reliance Industries. That stock also fell sharply, and that's despite the record amount of growth that we had seen in the earnings reported on Friday evening. The stock was up slightly in the early morning opening action, but could not sustain and continue with the gains throughout the trading session, and slipped away, contributing to the overall decline in the Nifty as well. On the flip side, we saw Cipla, ONGC as some of the gainers that managed to stay afloat in an overall lackluster, not just lackluster, it was a slam dunk that we actually saw in today's trading session. The equity markets, in fact, slipped for the fifth straight session on Monday. And as we inch closer to the series expiry, most of the experts do see the sell off to actually intensify going forward as well. Since January 17, from the time that we had seen the markets really slipping away, we have seen the Sensex has already tanked 3,300 points. The Nifty has given up over 1,100 points as well. Both of them down by almost 5 odd percent. Now, the 5 days of heavy losses have also seen investors losing anywhere to the tune of 17 lakh crore rupees of investors' wealth has been wiped off in these five straight sessions of trade. Now, investors definitely are seeming cautious, not very confident as we approach the union budget, the big day on 1st of February. Apart from that, of course, we do have the Federal Reserve meeting, where the US Central Bank will make it clear about its position on the interest rate hikes, and how soon and how fast and with what volume do they want to do it. And that is something that is keeping all the equities, the global equities, on the edge right now. Weak global sentiment, clearly one factor dragging the street overall. Concerns over hike in inflation, monetary policy tightening, the FPI selling off. The FIs have been doing massive sell off in the Indian markets throughout this month of January, barring the first 3 or 4 odd trading sessions. We saw huge sell off by the FIs and FPIs as well. That's definitely a major concern, and that is dragging the markets further. And the rising crude oil prices also denting the sentiments as well. The Nifty Bank also slipped by almost 2 odd percent in today's trading session. The India VIX, that's the volatility index that measures how volatile in the Indian markets, that rose sharply. It was up at 21.6%. Intraday, it almost reached 23, its all-time high levels as well. So highest in the last few months too. That has actually been a worrying point, and that led to the markets really falling sharply as well. And apart from that, amid the sectoral indices, the Nifty IT is poised for the worst monthly fall that we have seen since the decline of March 2020, the major crash that had happened. IT stocks, be it the big IT stocks, despite healthy earnings that they have reported, or the mid cap IT firms, or the new age technology firms, every tech firm is seeing a sharp, sell off, and this is somehow mirroring the fall that we are seeing in Nasdaq, the US index that maps the tech companies as well. Sharp fall in Nasdaq, and the stocks that are listed on Nasdaq was has been witnessed over the last few odd trading sessions as well, and that is also weighing on the sentiments on the tech companies as well. Talk about Paytm, Nykaa, Zomato, all of them are hitting their 52-week lows. PTC India Financial fell about 8% in today's trading session. The broader market, small cap and the mid cap, they fell about over 4%, underperforming the benchmark indices in today's trading session as well. Like I told you about the new age tech companies like Paytm. Talk about Paytm parent 197 Communications. The shares plunged more than 8% to a record low yet again on Monday. It has been on a downward trajectory, and today we've seen the stock slipping away below the 900 mark as well. 880 or thereabouts was it trading at towards the end of the session as well. Zomato was seen down 20%, hitting lower circuit at just 90 rupees a share is what Zomato has been trading at. Shares of Vodafone Idea also fell close to 10% in early trade. Remember, there were disappointment on the company's earnings. It could not recover towards the end of the session as well. We spoke to an expert who did say, Manish Shah of Nifty Triggers did say that the sell-off in the market has been a sharp one, but he does believe that severe bounce back from the lows is also imminent. He said that it is prudent for the traders to avoid short selling at this point in time after an extended move and brace for a sharp pullback as well. That's something, if that happens, the investors will be happy lot too. The price movement on the Nifty, he says, is very volatile. With only 2 days to go for the January expiry, the bounce in Nifty could be sharp and furious as well. So keep that in mind. That's what the experts are talking about. He also expects a extreme sharp bout of volatility over the next couple of trades. He does believe that traders should allow the market to cool off a bit before deciding on the direction. I was telling you about a major factor, FII sell-off in India. In the last 3 or 4 trading sessions, 1,000 odd crore rupees, in fact, 10,000 odd crore rupees have been sold by the FIIs as well. So that's a factor that you need to keep in mind. Over in the entire month of January, $2 billion worth of Indian shares have been sold too. So that's again a price fact that you need to keep in mind. So that's a kind of sell-off that is coming in, and that is something that is definitely weighing on the overall Indian market sentiment too. Well, it was a carnage on D Street today. How do we proceed for tomorrow after investors have seen a sharp fall in their wealth? And will it recover soon? Will it recover as sharply as some of the technical experts are expecting? Or will this decline actually extend further? Is something that we'll have to keep an eye out on. We'll keep you posted with all the developments in the world of stock markets. And for that, you need to like this video and subscribe to our YouTube channel, and also stick with us via our social media handles, that's Twitter, Facebook, LinkedIn, and Instagram. Thanks a lot for tuning in.